Good morning, everybody. This is the live market open for October 6th. I'm Yohay Elam of ForexCrunch.com and Market Movers podcast, doing this morning show for FX Street. We had lots of developments and we are expecting more. Let's see what we'll cover today. So, of course, the recent developments, as always, charts and levels, what's expecting us in the next quite busy 24 hours. And most importantly, you're welcome to put your questions and we'll try to answer them as deep as possible and as many as possible. So yesterday we had an important figure from the United States. We had the ISM non-manufacturing PMI. It came out a bit under expectations at 56.9, but not too shabby actually, because similar figures from other places in the world were much worse. So most importantly, and maybe confusing from this release, was the employment component. It actually went up to 58 points. Usually this serves as a hint towards the non-farm payrolls. So had we received this indicator one day before the NFP as a hint towards the NFP, I think it would have been very confusing because expectations would have risen. And then the actual figure, as we know, we had a terrible non-farm payrolls. Good morning, Jake. I'll begin the brief and then I'll answer your question. Then we had in New Zealand, the New Zealand NZIER business confidence. It missed. It sort of curbed the rally of the New Zealand dollar that we talked about yesterday. Then we had Australian trade data. We came out with a deficit of over 3 billion and it missed. And that was, of course, another small disappointment. But then we had a turnaround for the Australian dollar. And because the RBA left the interest rate unchanged and also unchanged regarding the language. So let's take a look at Aussie dollar and the reaction. So we had the Australian dollar capped under 71 cents. Beforehand, we've seen it rise thanks to the weak non-farm payrolls above the 70 level. Remember this double bottom here, and but 71 served as a cap. We've also seen it cap the Aussie last week, but this rate decision by the RBA allowed the Australian dollar to rise higher. So far, the high has been 71.34. We've seen it climb a bit down because stock markets are not doing so well this morning, but all in all, we've seen it break higher. So what did Glenn Stevens and his team say? Basically, of course, they left the interest rate at a low level for Australia, that's 2%, but they said that inflation is more or less on target, that the economy is still growing, that the fall of the Australian dollar is more or less in line with what we're supposed to expect. So at the moment, they're sort of okay with the level of the Australian dollar, and also there was no hint of more monetary action coming. So that allowed the Australian dollar to rise. Nobody was expecting a rate cut this time, but some were expecting a more worried tone given what's going on in China in recent months. But this week we have Chinese markets closed, so I guess the no news remains good news. Next resistance level above is only at the round level of 72 and then 72.70, which was the post-Fed level. And of course, 71 turns into immediate support, followed by 70.40, the round level of 70, and most importantly, this double bottom here of 69.35. Okay, let's go back to recent events. German factory orders badly disappoint. Let's look at the FX Street calendar here on Forex Crunch. So you can see this figure. We were expecting a rise in factory orders of 0.5%, and the actual figure was a drop of 1.8. And in addition, last month's figure was revised down from it was a drop of 1.4 to 2.2. Now these are figures for July and August, the summer, and this probably reflects this Chinese slowdown. So it's beginning to bite the German economy. And we're going to get a bigger bite probably in October or maybe already in September from the crisis in Volkswagen. If you remember, the huge automaker, symbol of German industry, they just cheated on emissions and the repercussions are going to be probably quite significant for German business confidence. But how did the euro react? Well, it's important to remember the euro is a safe haven currency, so it remains more or less in range, even rising within the range. So we have it between 111.70 and 112.15. And let's put another chart here for you. Hope you can see this one. I think we talked about this yesterday. Euro dollar is trading within a triangle, within a wedge. Downtrend resistance is very steep. We've seen a challenge after the NFP on Friday and also yesterday, and uptrend support is much more moderate. Now we're sort of bang in the middle of this range. So let's see your questions. Good morning, Jake. Good morning, Stuart. And good morning to John 573 and whoever else is coming here. So Jake asks, how confident are we that New Zealand dollar will see more rate cuts? I think they have very high rates compared to other G10 countries. How likely to see new lows? Well, I think they will continue cutting the interest rates. Why do I think so? Well, first of all, because that's what they hinted quite clearly. I think they'll cut them once again in this quarter, in Q4. It's currently at 250, if I'm not mistaken, sorry, 75. I think they'll continue cutting it. Yes, it's relatively high and higher than Australia and higher, of course, than the United States, Europe, Japan, the United Kingdom. So I think they do have a scope for cutting the rates. Let's look at Kiwi dollar. They also don't want a stronger Kiwi. So let's look at the chart of the New Zealand dollar. New Zealand dollar reached already yesterday the 65 cent level and even went as high as 65.30. Now it's sort of looking for a new direction just above 65. So it did go up, but I believe the RBNZ will cut interest rates. The housing market did cool down just a bit, so there's no danger. There's no overheating already in Auckland. And I think that's different than Sydney and Melbourne in Australia. And in addition, we had, well, milk prices did manage to recover just a bit, but they still have fallen beforehand quite a lot. So I think there's scope for another cut. And they do want, well, the Kiwi fell quite a lot, but I don't think they want to keep it a bit depressed. They don't want it to rise too much. Good morning, Stuart. A question from you. Adam Button says October is the month when the Australian dollar does well. Adam Button of FX Street is one of the people I most appreciate. Sorry, Forex Live. He's the editor-in-chief of Forex Live. I highly appreciate his work. Yeah, he follows seasonals on a monthly basis. And these seasonals, as weird as it sounds, yeah, they actually work. So I think he has a good point in saying that the Australian dollar can do well in October. First of all, we've seen it seasonally. And if we look at the Aussie chart, let's look at so far this month. I think we are already seeing it. It's a bit messy. Okay, so after all these huge falls in September, August, and July, you can see, and back in, well, maybe that's what the RBA is talking about as well. You know, it's we had it above 75 cents. 75 cents was one of the targets of the RBA, one of the targets of Glenn Stevens. He explicitly mentioned this level, the governor of the RBA. And since then, we've reached a low under 69. So after 3 months of huge falls, it also makes sense that the Australian dollar will rise just a bit. It also makes sense according to the seasonals. And I think the downtrend remains down because the trend for the trend remains down because also for China it remains to the downside. So maybe we'll see it continue correcting even more in during the month of October in line with seasonals, but later on we might see it resume its falls. So the lines I'm looking at for halting this kind of correction is the 72.70 here, which was the post-Fed high. So there's still quite a way to go. Also note the 72 level. But yeah, I agree with Adam that with the seasonals, and we're already seeing a correction. We might see a bit more, but I think it could be a bit short-lived, and we could see a resumption of falls in November and and in December. Okay. Let's move on to what else we have here. Let's look at the chart at the calendar for the big events for today, or the recent developments. Greece hasn't been in the headlines for quite a while. We did talk about them yesterday. Now there's a bit more news. Greek Prime Minister Alexis Tsipras made a long speech in Parliament in Athens, outlining what Greece wants as debt relief. So, if you remember, the third bailout that was forced upon Greece in the summer, in July and August, consisted of this segment that says that the debt issue will be tackled after the first review. So after Greece shows it's serious about reforms, they'll tackle the debt issue. Of course, the IMF wants a real debt haircut. Also, Greece, of course, wants some debt relief in order to see some growth. Germany says 9. They want Greece to pay its debt. Currently, Greece only asks for some kind of restructuring of the repayments, not a real haircut. So they do intend to pay all their debt just later. Of course, this is some form of restructuring, of making it easier for Greece and harder for its creditors, but it's not an outright haircut. It's not an outright write-down of debt. Okay, so he presented it in Parliament, but negotiations are going on today in Brussels in the Eurogroup, and it'll go on and on. We've already heard that the first review is delayed until probably it'll end only in December, but the dates are always flexible. It can be brought forward or usually pushed back. Okay, so that's a theme on our radar. China continues its holiday. It's the Golden Week. They return later in the week, and then we'll have, I think, more action for the Aussie and for markets. And the issue of a Fed rate hike in 2016 or 2015 or never ever, that continues to move markets. We had commentary from a Goldman Sachs executive talking about probably March, but they really nobody knows. Let me show you regarding a Fed hike. Can you see this? Can put this also for you on the web page, so you can use this very useful link. It shows it's the page from the CME group, which shows the countdown to the next Fed meeting. Okay, we don't need this countdown in seconds to know when the next Fed meeting is coming. There are only 8 per year. But more importantly, it shows what bond markets expect for the next rate hike. Okay, so this is the October meeting, October 28th. And as you see, it's just under 6% chance of rate hike. Of course, we know there's no Fed decision, there's no press conference, and there's no new forecasts. So everybody's talking about December, but look at this. More than 2/3 chance that the rates will remain unchanged in December, and only a very under 30% chance that they'll rise, okay? So bond markets are pricing in also no change in December, the last one for 2015. And that contradicts what Janet Yellen said and what other Fed officials said about raising rates this year, okay? So the bond markets don't see a move in December. So let's move to January 2016. No press conference. Expectations are once again no change. 57% that the rates will remain unchanged, and 36 do see. Okay, March there's a press conference. Here we're already seeing a bit higher chance. Okay, so only 46% saying that the rates will remain unchanged. Okay, so that's already a much more open debate. Okay, that's an interesting chart I'm watching, and of course the debate rages on. And the debate rages on about if the Fed doesn't raise rates, who will? Or if the Fed doesn't raise rates, maybe the other central banks could react. Okay, so we have at 5 GMT, that's 7 here, or 6 in London. We have President Mario Draghi of the ECB talking. He's talking in Frankfurt, This time he's not getting any prize. It's an official speech. He'll probably talk about monetary policy and could react to the recent fall in inflation and the recent NFP maybe in the United States, even though it's not his jurisdiction. So we can hear maybe hints about the next ECB meeting, which is coming on October 22nd. So that's for me a really big event for today. Let's put it in bold so you'll have it standing out. Beforehand, we have at 12:30 Canadian and US trade balance figures. So let's look at what we're expecting. On the calendar, we're expecting from Canada a deficit of 1.2 billion Canadian dollars, a bit deeper than last month. But it's also important to look at exports and imports. And in the United States, we're expecting a deficit of 45 billion US dollars. The United States traditionally has a deficit. So this is a big market mover for dollar CAD at 2:30 here at 12:30 GMT. Let's look at dollar CAD. Let's see what it's been doing in recent days. That's a clear downtrend, right? So we reached an 11-year high on dollar CAD, or an 11-year low for the Canadian dollar at 134.60, and since then, wow, that's quite a nice fall, isn't it? So we've seen it fall under in what I see as support at 131.20. This turns into resistance, followed by 131.74 and 132.20. There's a clear support line on the bottom. It's a very round number of 130, and it was where the pair made a swing low to back in mid-September, right after the Fed. So I think this double feature trade balance release is a great market mover for CAD. Later on, we have, of course, Canadian employment figures on Friday. So now we're under 131. And one of the reasons that the Canadian dollar is doing so well is that there's a sell-off of the US dollar, higher stock markets. Well, perhaps not today, but in the last few days, and that helps risk assets like the Canadian dollar, the Australian dollar, and sort of weighs on the euro. Okay, so that's what's going on in the Canadian dollar. Let's look back at the events for today. We have, for those of you trading the Kiwi, and Jake mentioned the rate cuts expected in New Zealand. Let's see if it appears here on the chart. We don't have a specific hour for that, and that's a bit frustrating, but it's somewhere, let's say around 2 GMT, 3 GMT, something like that. So this is a very volatile indicator. The global dairy trade, as just the price of milk for me, in short, that's New Zealand's main export. It's cow milk and sheep milk as well. We've seen it fall quite severely in the past few months, but the last 3 auctions were positive. We've seen rises. Last time was a jump of 16.5%. Okay, so in the last, it's released every 2 weeks and always has a significant impact on the Kiwi dollar. So we talked about Kiwi levels beforehand, and let's see another event for today. Later, 9:30 GMT, John Williams of the San Francisco Fed talks. It'll be interesting to hear from him. He's a centrist. What he sees regarding the next moves of the Fed, if they see a hike in December or not. In the past, he has been supportive of a hike in 2015. Let's see if he hasn't changed his mind. But towards tomorrow's session, we have another important move from a central bank. We have Japan. This is the first out of 2 rate decisions in Japan, in the world's 3rd largest economy, and they're not expected to change policy. We had negative signs in Japan recently, but we still don't have the GDP numbers for the 3rd quarter. Okay, we're going to have them later this month, and we have another Japanese rate decision on October 30th. So last year, a small flashback, we had, let's show it on the chart, we had the Bank of Japan announce more stimulus, and then also we had at the same day the government announcing that the pension fund could invest more in stocks. I wonder how that plays out. In any case, this is the monthly chart, and here we are in October. Okay, so we've seen dollar yen rise already in September of 2014. This is the jump in October and the bigger jump in reaction to this move in late October. All the way, that's when we got really close to 120. So will history repeat itself? It's never a clear repeat. It's more of what they call a rhyme. So it might be a bit similar, but there's a good reason it can happen again in October. First of all, we got hints about need for more action. And secondly, we're going to have the GDP data by then. But many say that also for tomorrow's decision and also for the decision at the end of the month, maybe the Bank of Japan will not make a big move because, yeah, inflation is far from reaching its target. The Japanese economy is stuck. But does all this monetary policy really help? There are, of course, doubts. And there's also another question. Do Japanese want to see their prices go up? Do they really want inflation? When we had the government raise the tax, the sales tax back in April 2014, Japanese consumers were, of course, angry. And we've seen that was the reason for the recession in Japan last year and the reason for more monetary stimulus. So it's still unclear, but when we look at the dollar yen chart, well, it's clear for us that we need something to get it out of this very frustrating range, hugging 120. In the better days, it reaches 120, 120. Worse days, 118.70. But for me, the worst days are when it's just stuck around 120, not going anywhere fast. So these are the levels I'm watching. Waiting for dollar yen to break out of this around 120 level. Last time we've seen it move was, of course, around the Fed decision. But well, time flies by and we need new action from dollar yen. Okay, we'll cover a few more charts. Do you have any questions? Okay, so let's go back to the top. Start from the beginning. Euro dollar, the world's most popular currency pair. Talked about it in depth last week in a webinar. You can see the recording of it if you wish. 112.11 is what we're seeing now. I see small resistance here at 112.15. 112.90 around 113 is important resistance, followed by the really strong lines of 113.73 and 114.60. On the downside, we have 111.60, sort of weak support, and 111, more important support. That's sort of the bottom of the range that we've seen last week. Pound dollar hit quite hard last week. Now it's sort of stabilizing. We had weak services PMI from the United Kingdom yesterday that kept the pair depressed. It couldn't reach 152.50, and it's now around 100 pips down to 151.60. Really strong support is, of course, at the round number of 150, and it's followed, on the upside, it's 152.50 and 153.20. We've had from the United Kingdom the Halifax prices, and they showed that they weren't too good. Let's look at the figures. It's not such an important release, but just house prices in the UK fell in September by 0.9%, but year over year they're still rising 8.6%. So housing market in the UK really cannot call it going down. Anyway, dollar yen, we've talked about it just now. Dollar CAD, I'll just mention 131.20 as resistance, 130 as support. Fell a lot from the highs as commodity currencies enjoy the sell-off of the dollar. Aussie dollar is off the highs after the RBA decided to leave interest rates unchanged. 72 and 72.70 are resistance lines. 70, of course, is support, 70.40, and 69.35 is the strongest support level. That's the double bottom. Kiwi dollar, the high we've seen yesterday was at 65.30. It could serve as some kind of resistance. 65, we're exactly there right now. Oh, just one pip below. And we have 64.65 is some kind of support, and then 64. And of course, 63.10 is what I see as strong support. Let's move on now to other currencies. Dollar Swiss 97.40. All in all, it's in range between 95.20 and 98.40, but usually the range is much more narrow. This is a very stable pair, Euro Swiss, thanks to SNB intervention. 109.20, a bit lower than previous levels, but not going anywhere fast. 110 and 180.70 are the sort of wider limits of this narrow band. Euro Pound. This is already a much more interesting cross. We've seen it bounce after the NFP to new highs above 74.40. Now we're at 70, just under 74. It's a sort of also hugging this kind of level. 73.50 is support. Euro Yen, just under 135. This is a cross of safe haven currencies. 135.40 and 133.20 are the bigger lines to watch. And now one of your favorites, the Dragon Gepi Pound Yen, 182.30. We've already seen it rise yesterday to above 183, but that was a false break. We talked about that. 182.50 is resistance at the moment. Support we have at 182. And I've added another chart for you for our morning brief. That's gold. I know some of you are interested in this precious metal. So we have resistance at $111.42. Gold, of course, against the US dollar. And further resistance at 111.56. These are levels that we've seen in recent days. Support is at the very round level of $1,100. And further resistance just under 111.70. Gold moves by speculation. There is, of course, some demand in the real world for industry and for jewelry, but most of recent movements have been around speculation. Looser monetary policy means higher gold price, and of course, tightening means a stronger, less demand for gold. Here is the reaction of gold to the Fed decision. So we had the Federal Reserve 3 weeks ago deciding not to raise rates, to leave loose monetary policy, and we've seen this rally in gold prices up to the high of 111.70. Okay, since then, of course, we have uncertainty. We have more range trading. Forex trading is never a one-way street. Okay, any more questions? We'll cover maybe bigger events this week. And because the action, of course, continues with central banks today. And maybe we'll see breakouts of euro and yen, but we also can expect other moves in other currencies. So this is what we had. We have tomorrow, of course, after the Japanese rate decision, of which we talk about, we have another figure from Germany. Today we had factory orders. Tomorrow we have industrial output, industrial production. Let's see what we're expecting. It's just before the show. Here we go. From Germany, we're expecting month over month a very shallow rise of 0.2%. It's for the month of August. Remember, before the Volkswagen crisis, and but we had the Chinese issues there. So this is expected to be lower growth than July. July we had 0.7. I believe that if we'll have another fall in this German figure, it goes hand in hand with the fall today in factory orders. The figures are for the same month, and of course it's related, factory orders with industrial output. So if we have both of them going in the same direction, it'll be, of course, a bit worrying for the Eurozone's locomotive. Then, of course, we have figures, trade balance from France, which is not that interesting. and then foreign currency reserves from Switzerland. We have a non-monetary policy ECB meeting. I don't think we're going to have any publication coming out of there. And tomorrow, during the show, we have manufacturing production from the UK. Manufacturing is 80% of industrial output. So we have a few figures published at the same time. Manufacturing output, industrial output, month over month and year over year. So we're going to have 4 figures flashing out tomorrow. And we're going to cover that, of course. And it's we're expecting sort of, mediocre figures, I would say. A small slide in manufacturing, 0.1, but a rise in industrial output, 0.2. And then year over year, we're expecting small gains. But let's look at the bigger events for this week, not only the events for tomorrow. So tomorrow at the Bank of Japan. And on Thursday, it's a very busy day. We have around noontime at 11 GMT or 1 p.m. here, 12 in the UK, we have a decision from the Bank of England. The Bank of England is not expected to change rates. This used to be a very boring non-event. They would just say no change and that's it, and would leave the minutes for later on. But they've changed their protocol since then, and now we have the meeting minutes released at the same time as the decision. So we have 9 members in the Monetary Policy Committee, 8, including Governor Mark Carney, voted against changing policy, and 1 member in the past 2 or 3 meetings, Ian McCafferty, voted for a rate hike. So this is the focus. Did 8 members continue voting? Did we have the same pattern also in this month of October, or do we have a change? If the outlook is really worsening, then we can expect all 9 members to vote for leaving the rates unchanged, and perhaps even the more dovish members like Haldane to vote for a rate cut. I think it's quite unlikely. I think maybe we'll have 9-0. Maybe Ian McCafferty will align with his colleagues, but it's very open decision, because on the other hand we have rising wages in the UK, and that sort of more pushes for a rate hike and not a rate cut. So maybe we'll have 2 members voting for a rate hike, maybe Christine Forbes, maybe someone else. So it's a very open decision. It could be a big market mover for the Bank of England. Let's put back the chart of pound dollar and see that, well, we do have more action here than in the euro. Well, in recent days it's been a bit more limited. Whatever the decision is, we'll have a lot of excitement. And we have a question from Stuart. Stuart says, I understand the yen is correlated with the Nikkei S&P, but what index is euro linked to? Euro dollar is linked, well, I would say to, it's not one indicator. It moves more with European markets. It moves more, for instance, when we have the European Open, that's at most markets open at 7 GMT, 9 here in Europe, or 8 in London. Then we have significant movements, as we see here. You see, this is this hour, this small slide here, but this rise is the previous hour, and it also moves, of course, with the S&P. So I think euro dollar moves especially with German DAX and the S&P, but in general, it's not only the German DAX, it's also the Euro stocks, it's also the CAC, it's also other indicators. Okay, so of course, it's not the only figure. Central banks have more influence on the bigger moves of euro dollar, but on the day-to-day moves, it's sometimes we see single stocks like Volkswagen in Germany, which fell quite sharply last week, and euro dollar fell with it just a bit. It wasn't really in tandem, but it certainly had an influence. Or we've seen Glencore do the same thing. And in the US session, of course, we have a few hours when Europe and the United States are trading simultaneously. Then we also have euro dollar influenced by both stock markets, which usually move together during these hours. And then when we have only New York trading, we also, if we have a change in mood in the S&P, in the Dow, in NASDAQ, we also have correlated movement in euro dollar. Okay, so that's what I see. Good morning, Josh. Your question is, of course, welcome. Hope that answers the question. Let's talk about other events we have this week. The Fed meeting minutes. So that's on Thursday at 6 GMT. We'll dive into it more in detail in due time, but in general, these are the meeting minutes from the decision I mentioned a few times, the decision back on September 17th. So in that decision, the Fed was relatively dovish, decided not to raise rates. It expressed worries about international markets, aka China, and about the strength of the dollar, and it needed to see more confidence about inflation and employment. On the other hand, since then we had Janet Yellen and others talking about raising rates in 2015, but then we had the terrible non-farm payrolls report. Remember, we had, let's put the numbers on the screen for you, just a reminder of the non-farm payrolls because it's still important, okay? Even though we're now 4 days away and quite a few trading sessions away from the NFP, let's put the main figures. So terrible NFP, only 142,000 jobs gained. Revisions, nearly 60,000 jobs were lost. Wages were flat, and year over year only 2.2. The participation rate in employment is back to levels last seen in 1977, the year that Elvis died. So that was terrible figures. And the question is, will markets look at this at the meeting minutes as reflecting what the Fed thinks now or what it thought back in September? And also here I don't have a clear answer because it's supposed to reflect the protocols, the minutes, what members talked about in that meeting on September 17th. On the other hand, these minutes are released only now. Why are they released only now? Because they are revised, they're edited, redacted by the team, by the staff in the Fed. But it's not only the ground level staff, but also the senior members, also the members of the FOMC. So this also serves as a tool by the Fed to guide markets. So some may say it's stale, it's not relevant anymore because of the NFP, and some will say no, it's what the Fed thinks now. In any case, it'll move markets, and that's a big event for Thursday evening here. Okay, let's look at what other figures we have, and of course we have a bit more time for questions. So what else do we have this week? We have Fed minutes on Friday and Canadian job figures on Friday for those of you trading the Canadian dollar. But lots of figures this week to look at. But the big events, well, these 24 hours are the most important ones. In my opinion, we had the rate decision in Australia, no change, strong Aussie. A speech by Mario Draghi in Frankfurt. I hope he'll move the euro out of this quite frustrating wedge. Let's put this one on the screen for you once again. Here you go. Usually when we have these kind of patterns, we have an explosion to the upside or to the downside. That's the question. And we have, of course, the rate decision in Japan. Okay, let's look at a few more charts and then wrap up while we wait for more questions. Let's take a look at pairs we don't look at often. EuroCAD. Well, now that EuroCAD is interesting to look at as a reflection of the mood in markets. So euro is a safe haven currency at the moment, the Canadian dollar a commodity currency. So with mood improving in recent days, of course, EuroCAD falls. less demand for safe haven, more demand for risk. So we've seen it fall under 147. Quite a lot of pips actually involved here. And when we had panic, or not panic, when we had worries after the NFP, we've seen it rise, but fail to break above 150. Okay, another level to watch here is 151.50, and the downside so far has been just above 146. So I don't know how many of you are trading the euro against the Canadian dollar. This one is the more popular cross, the Australian dollar against the Australian against the Kiwi, because they are neighbors, rivals sometimes. So 110 is, of course, clear round number. And we have on the downside this level here, which is 108.60. And the bigger scheme of things, we had the pair rising quite a lot, now changing course. Yeah, we've seen it sort of break to higher ground for quite some time. We've seen it reach this level here at just under 114, around 114. And now it's sort of at the bottom of the range. Will it break down to the previous levels seen in June and July? Anyway, we have here clear patterns. We should talk about this cross a bit more. Is any of you trading this cross or not? Anyway, you're always welcoming your questions. Which currency pairs to cover, which not, more fundamentals, more technicals, more anything that you wish. So I'll begin the wrap, and then if you have last minute questions, we'll answer them after the wrap. So this is the live market open for October 6th. I'm Yohay Elam of Forex Crunch Market Movers for FX Street. We had quite a few movements in markets. We had the Reserve Bank of Australia decide not to change interest rates and not to change the policy, the wording regarding the Australian dollar. This allowed the Australian dollar to rise quite nicely and break above the 71 level. Now we're seeing it relax just a bit, but it's still, we had an upwards movement in the Australian dollar. We had in the United States ISM non-manufacturing PMI slip to 56.9, but it's still not too shabby. We had a strong employment component there. In New Zealand, we had a weak figure that sort of curbed the rally of the Kiwi dollar. Business confidence missed. And we had German factory orders badly disappoint with a fall and a downward revision. But as we know, the euro is a safe haven currency, so this is actually euro positive, okay, in the absurd way. Resistance here, 112.15, followed by 113. Support at 111.60 and 111. What else do we have on our agenda moving forward? We have more talks about Greece that wants debt relief. We had Tsipras outlining that in Parliament. This doesn't impact the euro at the moment, but it's always important, okay? China is on holiday, that also enables the Aussie to rise. And the discussion about to hike or not to hike in December or March for the Fed remains an open question that'll continue accompanying us for quite some time. Later today at 12:30 GMT, US and Canadian trade balance. For those of you trading the Canadian dollar, this is of course a big event. We had dollar CAD slip under 131.20, support under 131, currently at 130.80. Support is at 130, and resistance above that is 130.20. And of course, we fell from the big highs of 134.60. In New Zealand, we have milk prices somewhere in the afternoon. And the big event of the day is Mario Draghi speaking in Frankfurt at 5 GMT. Will he push down the euro? Will he hint about more action? Or will he be relaxed like Glenn Stevens of the Australian Central Bank? It remains an open question. We also have the Fed's Williams talking at 9:30 GMT. But the bigger event of in Asia, in the early European morning, is the rate decision in Japan. They'll probably do nothing but will they hint about action in the next October meeting, just in less than 4 weeks? That's an important question. We'll discuss that, of course, tomorrow. We'll already know the result. And we have German industrial output to sort of come full circle with the factory orders to see if the German economy is doing well or not. And so this will impact euro dollar. This and Draghi, of course, most importantly, euro dollar is trading in this wedge in a narrow range. And will we see it break higher? It failed to do so in the past. Will we see it break lower? It's not getting to the support line any fast clip. So we're just bang on in the middle of the range, and this remains. Hopefully, we'll have an explosion from there. So this is the morning wrap. We have, I see, another question. I'll answer it. We have a question from Stuart. Is it likely that Draghi will cause a big move in euro dollar today? I hope so. Draghi usually has a tendency to move the euro. When this time the speech is about monetary policy, so I believe he will say something. I can't say. I'm not sure. He'll be very dovish. Last time he was sort of okay with what's going on. So I believe he will move the euro, but I'm not sure which direction it'll be. There's a question from Jake. How important is patience in FX trading? Well, we don't have time to talk about that in depth, but of course, patience is very, very important. I'll perhaps try to address this topic a bit more tomorrow or the next few days. Patience is crucial, especially for new traders. You have to know how to accept losses, to know how not to enter a trade. Making a decision not to enter is sometimes more important than to jump into a position, and the list goes on. It's critical. The answer is very important. Okay, so I'll wish you a very happy, patient day and good luck in Forex trading, and see you tomorrow. So goodbye.